Alright, I should be live on the virtual trading floor and live on YouTube. I've got Varun here also. I can turn on the camera if you want to come say hi, but
for a sec,
it only shows the camera. Actually, I have to do the disclosure first. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Here is the position disclosure. I don't even remember what changed. I got into and out of a bunch of things today. I got into Google, Amazon, and Apple. I closed all of them by the close. HCP I got back into and closed. Firm obviously on the short side. It was an interesting day. Anyway, now I'll turn on the camera for the people on YouTube so they can see me and so that Varun can come say hello.
I don't have much to say other than hello. I'm in a good mood this year. First year up in 3. It works, but I'm still going to keep learning and working hard from this man.
Good stuff.
Happy holidays, everyone.
Happy holidays, Varun. Yeah, there's no camera in the VTF. The camera is in the YouTube. I can't figure out on this computer how to do both. Every computer is a different tech situation. It's kind of frustrating. That's our crack. It just is what it is. I don't know. I have each computer's nuances all figured out, but I can't get them all to do what I want them to do. It just is what it is. It's about how my technology works. All right, let's jump into the meeting. I want to try to get out of here by 4:45 today if I can, just to put a little time limit on this meeting in case we've got questions coming in. But the SPYs finished up 0.37%, the Qs finished up 0.9%, and the IWM was up 0.17%. So this was a weird day, actually. I'm just being reminded of it. Kind of had a busy afternoon. NASDAQ up 0.9%. NASDAQ equal weighted up 1.8%. Yet the IWM is only up 0.2%. SPYs up 0.4%. The equal weighted SPYs up 0.9%. So massive performance in the equal weighted SPYs and Qs. I should say outperformance in the equal weighted SPYs and Qs compared to the SPYs and Qs. Usually when you see that, you also see a lot of relative strength from the IWM because it means that they are, not just giving a S&P and NASDAQ rally that's entirely based on 7 stocks. And as a matter of fact, those 7 stocks were extremely weak today. But it was weird that the IWM wasn't going. And at the same time, the QQQE was outperforming. Then so you would think maybe like ARK is having a great day and growth is going. No, ARK is down 1.25%. So it was a really kind of interesting day of like, I was saying earlier, I think Dennis got a kick out of it if he's still listening. I was calling it like the old world tech. It was your, and what's Oracle doing after hours since talking about old world tech? Down. But Cisco up 2% today. Broadcom up 9% today. Oracle, was green until the earnings report hit here. So it was mainly kind of this like, yeah, thank you for reminding me on Intel. Intel up 4.4%. Micron up 3.4%. Yet NVIDIA down 1.8%. Very, very strange day. I don't remember seeing a trading session like this in recent memory, where you have this huge outperformance on the equal weighted SPYs and Qs compared to the SPYs and Qs, but no outperformance from ARK and no outperformance from the IWM. So it just made for like kind of a really odd trading session. Some chatter, some speculation that's coming from the little NASDAQ rebalance that happened. I know that they added like DoorDash, they took out JD, so there was some obviously some rotation that was coming from that, but all the same, it just felt like a real strange trading session. How did XBI end up doing it? XBI finished red but came in off lows. Yeah, so again, strange trading session, outperformance from the equal weighted, but not with a big IWM move. We did get continuation today. The speculation this morning in the morning meeting, we basically noted in the morning meeting that the market broke out on Friday, right? We've been in this very tight range for 2 to 3 weeks, depending on which index that you're looking at. The market broke out on Friday. The question was, could we get continuation of Friday's breakout today, given positive gamma being still very high, which tends to insulate the market moves, and also right in front of CPI tomorrow, PPI on Wednesday, and the Fed on Wednesday. It's just a lot right in front of us. So I kind of felt that, given that piece of information, that the highest probability situation would be just more of a risk-off consolidation day. Not risk-off in terms of like a sell-off, but risk-off in terms of the market just not doing anything, no one placing any new bets. But we did certainly have to keep in mind that the SPYs broke out of a 3-week consolidation on Friday, and it's right as this 21 EMA, which we've been waiting on for so long, is finally starting to catch up. It's still not even there. I would say that the 21's caught up into this consolidation when we get to like 450, 330 or so. And obviously the Qs are there after a 3-week consolidation. But yeah, we finally were beginning to break out. IWM actually gave an inside day. So bottom line is SPYs, Qs gave continuation from Friday's breakouts. IWM just gave an inside day, but the Russell looks very, very healthy. CPI could obviously change all of this tomorrow. It's definitely the big question mark that's still out there. So we got to see what happens. Tomorrow. I am very confident in there being no raises and no cuts on Wednesday, but the data that we're going to be getting from the CPI tomorrow will affect the Fed fund futures, and it'll affect it in such a way that we will see higher for longer or insurance cuts faster. And basically, if you see that the CPI comes in a little bit hot, then the market will probably reduce the probability of interest rate cuts, in the first half of 2024. And if we see it kind of come in line or light, then the expectations will probably honestly stay where they are. In some ways, as I say that out loud, it seems like the risk is to the downside, at least from a thought process perspective on the CPI. But the technicals here look so bullish, and that cannot be ignored. The technicals look fantastic. So I'm sticking on the side of the technicals. We know that we still have, as we come into the end of the year, bullish fund flows generally into the end of the year and the beginning of next year. But it's like, I forget which analyst wrote it. It was in Pat's note this morning that basically said we're bullish into the end of the year as long as we can get through this week unscathed. And that's kind of how I think also. Let's get through the CPI. Let's get through the Fed. I'm cautiously optimistic. As long as there's no, real hot print tomorrow, then the status quo of this market as it's been here for the last, several weeks, which I would characterize it as, bullish, not momentum bullish like it was in the beginning of November, but maybe grindy bullish, is kind of what I'm going to expect into the end of the year, as long as we can get through the next 2 days unscathed. So we'll see how that plays out. So that's kind of the big picture from the market. As far as individual stocks go, it was an interesting day. I guess Affirm was the big chat. I'm taking a big sigh as I even bring this Affirm up. I don't necessarily think that trading Affirm today was easy money. As a matter of fact, this is kind of the trading that I've been talking about is hard money. And I still stand by that. I still think it's easier just to be buying strong names in their direction than trying to come in and kind of pick the top on some of these names. But for what it's worth, as a team, we did very well on Affirm short. I think Brant Hirsch really deserves some credit on the Affirm short. And then Pat started looking at it, and Pat was getting involved. And you guys just know that when Pat starts getting involved, first of all, we know Pat's very patient, so he's usually pretty good at this counter trend stuff. And then I start getting that FOMO of, man, I can't let Pat have all the fun and let Pat make all the money, especially on the rare occasion when he's sitting next to me. I got to be involved with it too. So I got involved with it also. It was not an easy trade. My pricing wasn't great. I tried to size up on what I thought could be a momentum break with a firm here at the 955 candle. So I had like a little bit of a feeler early, and I was looking at kind of these lows of these three candles, not necessarily the low of the day, to size up. So the low, I was really looking at the low of this candle. In hindsight, I probably should have been looking at the low of this candle, which is 41.90. But I was looking at the one after that for whatever reason, which I'm now realizing probably wasn't great. So I had to sell stop in at 41.93. And then this candle's low is 41.90. So then I got triggered in on size. And from a stop loss perspective, I was basically giving it to highs, though now I had some size and some real risk. Honestly, probably a little bit too much for these counter trend trades. We liked the three tails that came in, three candles in a row, that the chart was already now setting up as a day 3 RDR. We liked that there's a ton of daily chart extension here. Stock could easily pull back to $38. Stock could easily pull back to $34, $35 and still be healthy. So that was just kind of some of the stuff that we were looking at. But I thought that if we broke this like little intraday support that it was forming, that the momentum would come in on the break, and I got triggered in on it, and we did not break at all. So now my price isn't great as it's trading up into this 42.20 area. I'm watching it pretty closely. I did have a nice add into this high here. The high was 42.47. I took a pretty big ad right below that. I got my risk covered on it, but I actually got stopped out of that before the real move came on my ad. I got stopped out of the remaining 40% or so of that bigger ad that I think I had on into this new high. So that was unfortunate that I didn't have the bigger size for this move, but my core was honestly probably bigger than it should have been, given that it was a counter trend trade and everything. I mean, look, this thing, it broke down. It could have broken up, I feel like, almost as easily. For a while here in this pattern, unless your stop on your short was absolute highs or your stop on your long was absolute lows, they were just shaking everybody out in every direction. Once it looks like it's gonna, it triggered me in, and then it pushed up to stop people out, and then it broke new lows to stop people out or trigger more people in, and then it broke all the highs except for the opening high to shake everyone out on that side of the trade. They made this very hard, I think. You really had to have conviction, and you had to have the conviction to give it the spacing risk if you were short, basically to those highs. And then, the 11 o'clock was a news event, and they sold it into the news event, which we see that happen a lot with those types of events. The buy the rumor, sell the news events, unless the company sells something really spectacular. And that's what happened here. And we got the roll down. At the end of the day, it's my second best name of the day. I traded a bunch of it. I did pretty well with it. And again, look, I know a lot of us were in it, and a lot of us made money in it, which is awesome. I just still want to stand by what I've been saying over the course of the last couple of weeks. We can make money in this counter trend stuff if we pick our spots, if we have our risk managed, and we're ultra disciplined. I don't think that's the easier money in the marketplace. I think that's hard money. And, hard money is money at the end of the day, but so is easy money. And personally, I would rather go after the easy money 10 out of 10 times than go after the hard money. I can't dictate what opportunities the market is going to give me. So sometimes that opportunity is that counter trend trade. And that was here with a firm, and we recognized a bunch of layers of probability that trade could work in our favor. Again, day 3 to the upside. It isn't RDR on the daily chart. It's extended on the daily chart, very extended on the daily chart. The intraday was kind of confirming our price action there for a little bit. But there was also just this massive buyer that was unrelenting. And if the heaviness of the stock, if the selling ever stopped, this thing also could have just ripped up to $47. I almost feel like after I was in it, and I'm a big believer in buy the ticket, take the ride. I remember if Dennis is still here, I remember he was just like, oh man, I don't know about this trade when he was in it. And I think he stopped himself out of some or whatever. For me, it's always buy the ticket, take the ride. I already have the risk on. I'm going to follow the trade all the way through. I don't like to change my game plan after I'm in the trade. I find that leads to bad habits in the long run. But I totally agreed. When I couldn't get downside follow-through momentum, forget about where I shorted, but the fact that on this 10:05 candle, that they start to really break the levels and snap back again, it was like, oh man, the buyer in this thing is so strong. And while it was consolidating, it really feels like it was a 50-50 to me. Now 50-50 is not always a bad bet, because a 50-50 with risk reward can pay you really well. So 50-50 here, where there's room to $38 on the downside, if you've got, you know, whatever, my risk wasn't great on it, my pricing, my risk wasn't great on it, I probably had, high was 86 cents, I probably had 60-70 cents worth of risk on it, not great. Because again, I was looking for more of that momentum continuation on the trade. So 50-50 can sometimes be not that bad if the risk reward makes up for it. For me, the risk reward on the trade was honestly just okay. It really wasn't great. But then we got the breakdown, and you know, we made some money on it. But just because you made money on it, I don't think necessarily means that it's a good trade. I don't think that this is a bad trade either, for the record. I just, you know, I'm repeating what I've been saying. I don't think that this is the easier money in the market. So that's that. The interesting thing I was talking about earlier was just how weak big cap tech was. So Apple did finish with a nice tail, but still finished down 1.25%. So I bought that dip at a certain point, made a couple dollars, sold it to the close. Amazon also super weak today. Nice downside tail, but still closed down 1%. Same deal. I did buy the dip in this thing a little bit, sold it into the close. Google. I wanted to start looking at this in the 133 area. It actually ended up doing a full gap fill. Also was really weak at a certain point on the day. Still finished down 1.3%. Remember, these are the big cap tech stocks. Even forget about where they were at their lows when they were all down like 2.5%. Every name I just said was down over a percentage point, and the Nasdaq was positive today. It's not something you see very often. But yeah, Google with a nice little tail, closed off lows, bought the dip on that tail down there, sold it on the way up, sold my position out in the close, still finished down 1.3%. I didn't trade Microsoft, but it's down 1% at the end of the day. I didn't trade Meta, it's down 2.3% at the end of the day. I didn't trade Nvidia, it's down 2% on the day. They annihilated those stocks. There was real rotation, but there wasn't rotation into where I'm looking for the rotation, which is basically IWM primarily. It was rotation into Intel. So, I don't know. Let's see if that's just a one-day anomaly or not on the QQQ rebalance, or if that's something that actually becomes a pattern or not. I'm operating under the assumption that that's going to be more of a one-day anomaly, but maybe the market proves me wrong. That's pretty much it. It's pretty much all I got. So I got another 15 minutes or so. I'm happy to answer any questions that anybody may have. Scrolling up here in the VTF. So what do these Oracle numbers look like? Oracle beats on EPS by a penny. Cloud revenue looks like a small miss. Revenue is a little miss. Operating income is a little miss. Operating margin's a little bit of a beat. Not terrible, not great. Demand for cloud infrastructure and generative AI services is increasing at an astronomical rate. It's a heck of a line from Oracle. Business is good and getting better. Cool. Broadcom, you made me type up BRCO, AVGO. Yeah, it was a monster today. Boeing gave another. This Boeing daily chart's insane.
It had news.
Had news?
Yeah, helicopter contract or something.
This Boeing daily chart's
not to say
insane.
it justifies moving $100 in 3 weeks, but it did have news today.
The way they sold this down, which is every candle was red, to V bottom and then have every candle be green, and then to go up faster than it went down is just really, really insane on how Boeing's been trading. Levels for Oracle after hours. Yeah, $100 looks like a little bit of a level. 100 to 101. from Chris K. CI. So I see you have a question on CI. I would just say broadly, so I didn't bring this name up in the morning meeting. I thought that the news in CI was very significant. Earnings, but also like a really large buyback initiation, if I remember correctly. And I love that. I just felt that they were gapping this thing up so big that it took away the opportunity, and that CI tends to not be a great mover, and it's also an expensive stock and can have a really wide spread, which is something that I generally prefer to avoid. Let me see your question. I took a trade long in CI after it gapped. I felt like overall it's in a slow grind up, but recently it started selling off. Overall, it's been in a slow grind up. I mean, if you scroll out to 2013, you're right, but I would say for the last 2 years or so, it's just been very stuck in this very broad range, right? 340 to 240. And then they were selling this thing back down pretty hard, and then the earnings report and the buyout happened. I mean, the buyback news happened.
I mean, I would also say just shorting a stock because it gaps up huge. Just because it gaps up huge is not.
Or buying it.
Or buying it just because there's got to be some sort of kind of setup there. You know what I mean?
Yeah. So based off the chart, Chris, would I have bought it or would I have shorted it? The answer is I would do nothing with this chart. I just think that I don't like the daily chart, and I thought it was gapping up massive for what the news was. For that type of situation, I usually just want to let it settle out. Now, there are traders who trade with a little bit of different style than me, who are more pure momentum traders, who maybe could find a trade on the break of the opening 5, or I know in the past on earnings names like Pat has tried to use and has probably successfully used like a break of an opening 2-minute bar. Those actually both break to the downside. So, when you're dealing with this large of a gap, I always want to see how the extension gets handled. And it's so extended, it's going to take a long time for that extension to get satisfied. And you can see that the ADMA didn't actually get to price action until 10:40 on the 5-minute chart is the first time it touched. So for me, with these really large gaps, I typically would do nothing off the open. And if you had, and you didn't get it here, like if this pivot low on the 3rd bar was coinciding with the area of the ADMA on the 5-minute, I like that trade a lot for a long. For me, this pivot low that's happening on the 3rd 5-minute bar is so far away from the ADMA, I'm never buying it. But if you get this situation where they price correct it for the first 12 minutes into that equilibrium zone and it creates a pivot point off of that, that's actually a trade that I really, really like. So for the people that are pure momentum players, they actually could have tried it short off the open. Break of the first 2-minute bar, break of the first 5-minute bar, and then their big picture thought process is the big picture extension on this 5-minute chart or on the 15-minute chart that they're hoping gets satisfied through price as they, scalp for momentum to the downside. That's one trade. My preferred trade is to wait for price time correction to occur and then look for the pivot in the direction of the gap. That's a second trade. That trade never set up here. Or, honestly, a lot of times when the gaps are this big, I just end up doing absolutely nothing, and that's my preference. The gap is so big, it's big for a reason. Had really good news this morning, but it's pricing that in with the gap. So the price action itself could therefore just be very sloppy, which in some ways this kind of was. So for me, that just means I'm going to do nothing. I'm going to wait for the daily chart to kind of reset up. I hope that helps Chris. From Dave S. I'd like to ask about shakeouts. I entered a long in the queues after 9:45. After 9:45, when the doji on the 5-minute chart went to the upside. Okay, this one here to the upside. Lately, with either this or with other setups that I take, I end up being tested and getting stopped out right before the trade starts to work again. It didn't feel like this happened nearly as much at the start of November, although it's a very unique market environment, or other times where the market was trading in a different way. Okay, so again, market environments, different types of trades will work differently in different market environments. My thoughts on why this might be the case is that since we are such a long gamma low vol environment, there is a much higher chance that lower time frame trades don't end up working without some sort of retest of your position, even if the thought process on the trade, I think what you're saying here is especially true right now for the indices. Even if the thought process was right on the trade, do you agree or disagree with this thesis? Or if so, would you recommend not taking these trades unless the environment changes? Yeah, I think that what you're saying is particularly correct on the indices right now. In this type of environment, where the moves higher are just going to be met with a lot of selling, which doesn't mean that it can't continue to move higher. It just means that there's probably going to be a lot of outright failures, and in the situations where there's not failures, just, you know, bigger reverberations back down that then can get bought back up, if that makes any sense. I don't think that's necessarily true right now for individual stocks, though. From an individual stock perspective, we're seeing such large dispersion that there are companies that are trading great to the upside at the same time that other companies are trading great to the downside. And that's exactly what we noted about, you know, today's price action when you compare the opening downtrends of some of the big cap tech stocks in the beginning of the day on a 5-minute chart that lasted for about a half a day. Oh, guess what? Half a day downtrend, giving to a midday reversal, then leading to an uptrend. Almost sounds like this market that we've been in all year, right? But all the same, there's just been these large, you know, dispersions where you've got individual stocks that are going and working with momentum up or trending down and being really relatively weak. So I think that what you're describing is correct. It's particularly true for the indices. It's not necessarily true for individual stocks. And again, that's the market environment that we're in right now. And one of the big keys to successful trading is understanding the market environment that you're in and adjusting your strategies to that environment. So I appreciate the question, Dave. I hope that helps. From Bright in the YouTube, what do I think of RH? Where it will run into resistance for this rebound on the daily chart. What do I think of RH? They smoked that on earnings, right? Yeah, on Friday this thing got hit hard on earnings. I don't have a strong opinion for you on Restoration Hardware here. Obviously they beat it down on earnings. It's an inside day today. I think that there's room for this thing to be able to bounce back to 260, but it's hard to be bullish on this thing after that earnings report. So yeah, so if you're asking me about a resistance area, I would say that 260 area is probably going to end up being resistance on the upside. You have some pivot lows there from when it was working its way higher. It's about where the equilibrium zone is. That equilibrium zone is going to be working its way down. SADMA is going to cross below its 21 EMA at a certain point relatively soon. So yeah, into that 260 area is where I would expect some resistance. Thanks for the question, Bright. All right, gang. Looks like I got through the questions. I'm going to wrap things up. We got CPI tomorrow. So have a great night, and I will see you all tomorrow. If anyone's in the New York area, Josh, myself, Patrick, a few other people, we're going to be at Beckett's Bar and Grill on Stone Street for the next few hours. Technically, the address is Pearl Street, but the entrance that is probably on Stone Street. Have a great night, everybody. See you tomorrow.